Good morning and welcome to the 90th edition of the press conference of the Monetary Policy Committee. The Chairman and Governor of the Bank of Ghana, Dr. Ernest Addison, is ready. We'll keep to the same house rules, ask only relevant questions so that we have enough time to have fruitful deliberations here. Thank you.
Okay, thank you very much, AC. Good morning, ladies and gentlemen, and welcome to the Monetary Policy Committee press briefing after the 90th Monetary Policy Committee meeting during the week. Since the last meeting of the MPC in July 2019, global growth has remained subdued, attributed to US-China trade tensions and the unresolved Brexit negotiations, as well as geopolitical tensions, which impacted on oil prices. These developments have softened business confidence and further weakened investments in advanced economies. In emerging market and developing economies, growth has also weakened, partly influenced by the slowdown in global trade and concerns on the US-China trade tensions. Consistent with global growth, global inflation in advanced economies has softened due to sluggish wage growth and, to some extent, lower energy prices. Although inflation is forecast to remain stable in advanced economies, the upsurge in recent geopolitical tensions and loss of oil infrastructure in Saudi Arabia may temporarily pose some risks to crude oil supplies and exert upward pressure on prices. Global financing conditions remain favorable due to the general accommodative monetary policy stance across most advanced and emerging market economies. The weakened growth momentum underpinning the dovish shift in central bank forward guidance in most advanced economies may keep interest rates low to support growth over the medium term. Just 2 days ago, the US Federal Reserve cut interest rates the second time since July. The European Central Bank has also lowered interest rates and restarted its asset purchase program, all in a bid to prop up economic activity. Central banks in most emerging markets and developing economies have also followed the same policy direction. These developments may further trigger surge for higher yields, especially in emerging market economies with stronger fundamentals. On the domestic front, growth has remained strong and the momentum has been sustained since last year. The latest growth estimate released by the Ghana Statistical Service indicated a 5.7% GDP growth in the second quarter of 2019, driven by strong growth in communication, mining, and real estate sectors. The second quarter growth is higher than the 5.4% recorded during the same period of last year. Non-oil GDP growth was estimated at 4.3%, lower than 5% recorded in the same review period a year ago. The growth in the bank's updated composite index of economic activity showed some slight moderation. The CIEA recorded an annual growth of 2.1% in July 2019, compared with 4.3% in the corresponding period of 2018. The key drivers of economic activity during the period were private sector credit expansion, contribution to social security by the private sector, port activity, exports, and domestic VAT. Latest results from the confidence surveys conducted by the Bank of Ghana in August 2018 showed that while business sentiments improved significantly, reflecting optimism about current and future economic prospects, consumer confidence softened somewhat, reflecting the latest upward adjustments in utility tariffs. Following the revision of the Consumer Price Index by the Ghana Statistical Service to reflect weights from the Ghana Living Standards Survey of 2017 and a revised base year of 2018, a new measure of headline inflation was estimated at 7.8% for August 2019, moving it below the central path of the Bank of Ghana's medium-term inflation target of 8 plus or minus 2%. Food inflation was reported at 8.2% and non-food inflation was at 7.4%. However, underlying inflation, measured by core inflation, that is CPI, excluding utility and energy, inched up slightly alongside some moderate pickup in inflation expectations from businesses, consumers, and from the financial sector. On the international commodities market, Brent crude oil traded mixed in August 2019, recording the sharpest decline in the year as global demand weakened amid escalating trade tensions. On a year-to-date basis, crude oil prices increased by 3.1% to an average of $59.5 per barrel. The recent geopolitical tensions has exerted some pressures on oil prices, pushing it above $60 per barrel. Gold prices rebounded strongly to levels last seen in March 2013 on the back of global growth concerns. On a year-to-date basis, average gold prices gained 20% to $1,501 per fine ounce. From the beginning of the year to date, cocoa prices have contracted by 0.8% to an average of $2,238.6 per ton. From January to August 2019, total exports amounted to $10,662.1 million, while imports was $8,017.7 million, resulting in a provisional trade surplus of $2,644.4 million. This compares to a surplus of $1,395.1 million the same period last year. The large increase in the trade surplus reflected a contraction of 8.6% year-on-year in the import bill due to benchmark valuation adjustments, while exports went up by 5.1%. The trade surplus is expected to positively impact the current account with a projected deficit of $329 million in the third quarter of 2019, compared with $593 million a year ago. Gross international reserves increased by $1.2 billion to $8.2 billion. That is equivalent to 4.1 months of import cover as at the end of August 2019, from $7 billion, equivalent to 3.6 months of import cover at the end of December 2018. The foreign exchange market has remained relatively calm. The Ghana cedi cumulatively depreciated by 9.2% in the year to September 2019, compared with 7% for the corresponding period of 2018. The British pound and euro. Against the British pound and euro, the Ghana cedi cumulatively depreciated by 6.9% and 6.1% respectively, compared with 4.2% and 4.9% depreciation over the corresponding period of last year. In trade-weighted terms, the real effective exchange rate continued to be broadly aligned with the underlying fundamentals. Provisional data from January to July 2019 shows that total revenue and grants amounted to 26.8 billion Ghana cedis, compared with the envisaged target of 31.8 billion Ghana cedis. The revenue shortfall were mainly from international trade taxes. Total expenditures and arrears clearance grew in year-on-year terms by 22.4% to 40.4 billion Ghana cedis, marginally below the target of 42.9 billion. These developments resulted in an overall budget deficit on cash basis of 3.9% of GDP against the target of 3.2% of GDP. The primary balance also recorded a deficit of 0.7% of GDP as against a programmed surplus of 0.1% of GDP. In line with these developments, the stock of public debt rose to 59.4% of GDP at the end of July 2019, compared with 53.1% of GDP at the end of July 2018. Of the total debt stock, domestic debt was 98.4 billion Ghana cedis, of which 10.7 billion Ghana cedis represented bonds issued to support the financial sector cleanup, while external debt was 107.2 billion Ghana cedis. Growth in broad money has slowed considerably in the first 8 months of 2019, partly reflecting continuing tight monetary policy stance. Annual growth in M2 Plus was estimated at 11.8% at the end of August 2019, compared to 23.1% in the same period of 2018. The slower growth in total liquidity mainly reflect sharp moderation in net foreign assets. Annual growth in reserve money was 15% in August 2019, marginally up from 14.2% annual growth in the same period of last year. Private sector credit growth has moderated slightly after peaking at 22.1% growth in March 2019 as credit conditions tightened marginally. Annual growth in private sector credit was 13.4% in August 2019, compared with 15.8% growth in the same period of 2018. In real terms, private sector credit expanded by 5.2%. The recent credit condition survey indicated some tightening of credit stance on loans to enterprises and households, despite increased demand for loans as banks continue to improve their credit risk management systems. Money market rates have broadly remained unchanged for both short-dated and long-dated instruments since the last MPC meeting. The 91-day Treasury bill rate has remained steady at 14.7% since July 2019 from 13.3% a year ago. Similarly, the 182-day instrument is at 15.1% from 14.9% over the same period a year ago. Rates on the secondary bond markets have eased marginally, with yields on the 7-year, 10-year, and 15-year bonds trending down to 19.26, 19.57, and 19.71% respectively in August 2019, relative to 19.64, 19.75, and 20.03% in June. The weighted average interbank lending rate has remained at 15.2% since March 2019, having declined from 16.2% in August 2018. Lending rates of banks averaged 23.9% in August 2019. The banking sector remains well capitalized, solvent, liquid, efficient, and profitable, with improved financial soundness indicators. The latest assessment shows marked improvement in bank performance, which is reflective of the positive impact of the recent reforms. Let me briefly highlight some of the pre- and post-reform key financial indicators. At the start of the reforms, in August 2017, total assets were 89.1 billion Ghana cedis for a sector that had 36 banks. And 2 years after the reform, total assets have increased to 115.2 billion Ghana cedis at the end of August 2019, even with 23 banks. In the same direction, total deposits have improved from 55.7 billion Ghana cedis to 76 billion Ghana cedis over the same period, reflecting a stronger deposit base owing to more trust and confidence in the banking sector. Banks are beginning to refocus on their core mandate of financial intermediation based on the strong capital base. The industry's capital adequacy ratio, computed in accordance with the new Capital Requirements Directive under the Basel II-3 Capital Framework, stands at 19.8% in August 2019, well above the 13% minimum regulatory benchmark. Asset quality has continued to improve with a decline in the non-performing loan ratio from 21.3% in August 2018 to 17.8% in August 2019. Excluding loans in the LOCS category, the NPL ratio has declined from 11.7% to 8.9% over the same comparative period. The NPL ratio is trending in the right direction and is expected to be sustained by continued implementation of the NPL write-off policy, intensified loan recovery efforts, and stronger credit risk management practices. To summarize, the committee noted the continued slowdown in the global economy. Accordingly, global financing conditions have remained accommodative across both the advanced and emerging market economies. The recent downward adjustment in the U.S. Fed funds rate reveals deep concerns about the pace of growth in the United States and the global economy. The dovish signals from the advanced economy central banks, the relatively subdued global inflation, and the global growth slowdown have worked in concert to ease currency pressures on emerging market economies, including on the Ghana cedi. In addition, the favorable financing conditions could support non-resident capital inflows and reserve buildup. This should provide support for relative stability in the local currency. On the domestic front, the committee observed that growth remains strong and the medium-term outlook is positive. The medium term is expected to be driven by improvements in business sentiments and expectations of increased production in the oil and gas and mining sectors, and continued implementation of growth-oriented government flagship projects. On inflation, the committee's view was that the pace of disinflation had slowed somewhat. The recent underlying inflation trends, gauged by the core inflation and weighted inflation expectations, all showed some uptick in August 2019. This gives some indications of emerging pressures, coming mainly from the recent upward adjustment of utility tariffs, export prices, and transport fares. The second round effects of these measures would have to be monitored closely over the next quarter. The fiscal situation remains a concern, and strengthened efforts would be needed to close the deficit gap. The committee was concerned about the continued revenue weakness, which requires expenditure adjustments to contain a larger than projected budget deficit. It will help underpin investor confidence in the Ghanaian economy and reduce the burden on monetary policy. Global conditions and inflation developments at home have created some policy space for monetary policy, which, however, cannot be exploited in the current circumstances. Looking ahead, it is expected that the full implementation of new tax measures will likely impact revenue performance in the last quarter to help achieve the fiscal deficit target set for the year. Under the circumstances, the committee has decided to keep the monetary policy rate at 16% while monitoring developments going forward. Thank you.
Thank you, sir. Question time, please. Introduce yourselves, yes.
Yeah, good morning, Governor. Two quick ones. First of all, Governor, with the rebasing of the CPI, it's brought inflation down to 7.8% because of rebasing. Now, is that affecting the Bank of Ghana's medium-term target for inflation? Are you adjusting your target because of the effects of the rebasing for inflation? That is one. The second one, Governor, is a matter that concerns me a lot, sir. The 5 banks that were supposed to be given GAT funding, we are now in late September. How many of these banks are now adequately capitalized? And what is the Bank of Ghana doing about the ones who have failed to recapitalize? Because we are 9 months beyond deadline. And people are complaining that the playing field is not level. The last thing, sir, is the merger between First National Bank and Ghana Home Loans. Has it been completed? Because as of the middle of the year, Ghana Home Loans was still releasing its accounts as an independent entity.
My name is George Afe from Joy FM. Governor, are you worried that you talked about anytime you have an opportunity to engage the public and the banks, you talked about the cleanup being completed. And I look at your data, are you worried about the rate of response from the commercial banks in terms of credit growth? And do you think that you may have to do more to stimulate the growth of credits to private businesses? Because when I engage some of the banks as well, they think that in terms of regulations, things are more tougher than before. So whatever that they do, they are watching their back. You're talking about IFRS 9 and all those prudent regulatory requirements. So instead of an environment that will stimulate some innovation and more growth of the loan book, they are being so cautious, and that is impacting on lending. Do you think that something has to change to ensure that that growth that you're looking forward to and growth in credit is realized? On the Ghana CD, I've seen some fair stability on the market, but in the past we had some serious volatilities. You've been on the market frequently than previously. Do you think that the approach should change? Because sometimes I have a feeling that you want the city to a little bit depreciate a little bit, and when you come in, things stabilize strongly. Economic Intelligence Unit is forecasting some sharp depreciation going forward. You may downplay it, but don't you think that investors might price that forecast into their engagement with you when they buy bonds, when they do all those things and blah blah. So two quick things about whether you should intervene quicker than before, and whether you're also worried about the EIU's report on the city. You raised issues about speculations, but they are forecasts, and people might take their forecast as serious, and that might impact on those who buy your bonds and also engage with you as well. Thank you.
All right, thank you very much. My name is Richard from CTFM. I want to find out from you, you've continuously talked about the fact that we need specialized courts to deal with some of these fallout from the cleanup of the banking sector. I want to know whether you've engaged the Chief Justice or any other relevant authority, and what has been their feedback, and probably when are we seeing this specialized court. And then also, following the revocation of the licenses of the savings and loans companies and the finance houses, having to look at some of the people behind some of these institutions and the passage of the fit and proper regulations, I want to know what is the implication for the fit and proper regulations or the directive on these people who were behind these institutions. Are you saying that given that some of the institutions they were supervising broke some of the laws of the Act 930, they are unable to hold position in the banking sector or the financial sector again? I just want to know the clarity on that. Thank you.
Okay, thank you very much for this first set of questions. I think that the Thomas question on the implications of the new inflation, I think it's a very important one. We were all quite surprised with the new rate of inflation of 7.8, which came about because of the rebasing and the new Ghana Living Standard Survey. So trying to assess what that means in terms of medium-term targets for inflation, obviously that has to be done. We currently have a medium-term target of 8%, which means that if we are to accept the 7.8, we are slightly below the medium-term central path of 8. We think that maybe this is the time for us to review the optimal target for inflation for a country like Ghana. As you're aware, and I've said this before at the MPC, that when your trade partners' inflation is below 5% and you have 8% inflation, you are not competitive. So we must aim to drive inflation closer to our trading partners' inflation rates. And if you agree with that argument, we should be looking at setting a lower medium-term target for inflation, whether it should be 5 or 6. That's where the debate will be. But I expect that by the end of this medium-term period, we would probably have to reset the targets for inflation lower. The second question which you had asked had to do with the 5 banks, and this is an explanation I have given several times over, that you're looking at banks that the government had guaranteed. Now, this is the only reason why their licenses were not revoked, because the government had more or less provided the necessary guarantees that if they faced any difficulties, the government was going to step in. Now, out of the 5 banks, 2 of them were state-owned banks, Agricultural Development Bank and NIB. So far as I know, I think the NIB recapitalization has been completed. The government has contributed their share of what is required to raise NIB. And I think in the last week or so, we have had all the others also completed. Omnibank and BSIC, UMB, and then Prudential. The only sticky point is the case of NIB, where the capital requirements appear to be larger than we had originally envisaged. So obviously, NIB is a bank that we need to do some more work on. But remember, it is a state bank, so the considerations are very different. And yes, the question on GHL and FNB, I think that has also been completed. So there are no issues on any of those banks anymore. So then I come to the question from Joy FM, the cleanup being completed. Yes, I mean, to the extent that the problem institutions, both in the banking sector, in the savings and loans and finance house segments, and in the microfinance sections, have been taken out. We think that that should end the exercise. We had also said that rural banks were a different kettle of fish, and they would be looked at by the Apex Bank. We would work with the Apex Bank to see how best to deal with some of the problem institutions in the rural bank sector. So we think that largely the reforms that we intended to put into place over the last 2 years have been very successful and completed. Most of the weaker institutions which were driving up operational costs, which were making lending rates high, are out of the system. If you take the microfinance segment, for example, these were the institutions that were setting up deposit rates. Microfinance institutions were bidding up deposit rates in the market because of their inefficiencies. And yet they were the ones offering the 31%, 32% rates to attract deposits. Now, I understand that the deposit rates in that segment have collapsed from over 30% to around 15%, which is what we expect, because the consumers or those who patronize that segment of the market are more interested in institutions that are well managed and stable rather than chasing yield. And we expect that this reduction in deposit rates on that segment to have a knock-on effect on all lending rates or all interest rates in the financial sector. And this is where we are pushing the banks to go. We had last week met with each of the banks to discuss the impact of all of this on their operations. And we are quite confident that the lending rates will come down. In fact, if you look at today's Monetary Policy Committee press release, lending rates are around 23, 24%. They have come down substantially. And we expect that credit growth will pick up significantly. Meeting with the banks, this is the sense that we get. Yes, some of them are concerned about IFRS 9 and expected losses, and therefore have to be careful about, the lending. But I don't think that should necessarily lead to lower, lending by the banks, as you put it. We are having sort of a risk-weighted assets approach where you ask them to provide more capital buffers when they assume higher risks. So yes, they have to watch the risks associated with the lending that they undertake, but that should not necessarily lead to a lower credit growth. Now the question on CD stability, and your concern is the Bank of Ghana's role in the market, I believe. And I keep reminding this meeting that the Bank of Ghana's focus is on inflation. This is really the framework for our monetary policy. And therefore, our activities in the foreign exchange market is not with a view at setting a particular exchange rate. But having said that, we think that once the fundamentals are where they should be, once the interest rate is appropriately positioned, we should from that derive an exchange rate which we think is reasonable and competitive. And this is the report that we have given to you today, in spite of the stability that we have seen over the past few weeks. In terms of the trade-weighted real exchange rate, it's very consistent with the developments in our economic fundamentals. The EIU, I haven't seen the prediction, but I mean, they are entitled to make their own forecasts. We think that we have relatively strong buffers. At the end of the day, it depends on the buffers that you have. Normally in August, September, the central bank reserves would be at its lowest point. This year, our reserves are fairly strong in August and September, even before the cocoa 1.3 billion inflows come in. So if anything at all, we are in a better position to deal with any adverse shocks to the exchange rate over the next quarter. On special courts, yes, we have mentioned it several times. We have engaged the CJ. I cannot tell you whether special courts will be established for these cases, but the discussion is still on. The dialogue is still on. The issue of fit and proper, I think it's a good subject that you have flagged, because we need to put up the list of shareholders and directors who account for all the malfeasance in our financial sector. Today they are out there granting interviews on radio stations and misinforming the public. But we are still discussing on how to deal with people who are not fit and proper in terms of Act 930.
Thank you very much, David Hutton, Radio France International. Bonjour, mon governor, my governor, and bon weekend. Can we know more about the interbanking lending rates? And there's been a small publication on...
Si tu voudrais parler français, tu peux parler en français. Moi, j'habite à Montréal. Hein? C'est pas un problème, là.
C'est pas un problème.
Oui, yeah.
Oui, ok, pas de problème. J'explique qu'il y a un problème sur l'identification de fonds au bancaire, the identification of withdrawing money from banks. Now, il y avait une histoire sur un article sur le papier que l'autorité nationale d'identité, National Identity Authority, came out to say that the Bank of Ghana is not accepting the new identity card, ou il n'accepte pas le nouveau carte d'identité pour enlever l'argent. They don't accept the new identity card to take money, apart from passports, national insurance and voters register, and occasionally even press ID. Occasionally they consider press ID. Let me add that item. So, what is the situation? Is the bank in favor of the National Identity Authority's new national card for withdrawals of money from banks, as you came out to talk about third-party withdrawals from banks lately? Thank you, and we would like to know more about the interbanking lending rates. Thank you very much. Merci.
Let me use the microphone. Yeah, that's me. I'm Stan. I'm a reporter with report for GH1 TV. I wanted to know, it's about the overexposure of domestic bonds to foreign investors, sorry, non-resident investors. I understand you and the Ministry of Finance are working on a cap, and I wanted to understand if you had arrived on an indicator for that at the moment. And I also wanted to know if know of your clear-cut strategy for checking local businesses that continue to trade in foreign currency. Thank you.
Good afternoon, Mr. Governor. My first question, during the recent World Economic Forum in Cape Town, you were quoted as saying, let me just paraphrase, you said inflation has continued to come down and our policy rate is going to follow such path. Apparently, I was expecting that we're going to have some cuts, but it didn't happen. I don't know what happened. Is it because of the recent, hike in transportation fares, which of course is likely to push up inflation? Is that why you decided to hold the policy rate at 16%? My second question, what could be our reserve position if we receive all the 1.3 billion syndicated loan? Third question, government loses close to 5.2 billion through tax exemptions. Is this likely to affect our fiscal consolidation process? Thank you.
My name is Morris Ogbete with GTV. You talk about confidence in the banking sector. I guess it is limited to the banking sector alone and not the entire financial sector, because the little I see in the sector indicates that confidence is low. People are not really interested in putting their monies with firms, finance houses, investment firms, and all that. What do you see that we don't see, sir?
That we have. Maybe I would start with the immediate one on confidence in the banking sector, which you raised, and agree with you that confidence requires time, right? It's not something that you can gain overnight, and we expect that over time, the confidence in the sector will become stronger. Now, the reason that we said that we see some improved confidence, it's relative, is the developments in the deposits of the banking sector. When I was reading the press release, we gave you what had happened in terms of deposit mobilization by the bank. So if you see increased deposits of the banking sector, that in itself indicates that people are putting more money in the banks. And I think that we expect that over time, given the measures that have been taken for the finance houses and savings and loans, over time we expect the confidence in that segment to also improve. Now, the question on the overexposure, non-resident holdings of our bonds, the key thing to note there is that the numbers have gone down significantly. We had started a year ago with almost 36% non-resident holdings of our bonds. Today, that number has dropped by almost 10%, to 26, 27%. So that vulnerability, has reduced considerably over the last year. The issue of dollarization, this is what we have been trying to deal with in trying to prevent people from pricing in US dollars because of the impact, the negative impact of dollarization on our economy. And I think we're beginning to see the results. I mean, the whole of this week, most of the advertisements that I have seen in the national dailies are all in cedis. Even house prices are being quoted in cedis now. So we are beginning to, see compliance with the regulations on pricing. And as you're aware, we had a team that went out during the week trying to visit shops that are suspected to be pricing in dollars to sensitize them against the practice. That should help all of us in terms of, the performance of the economy broadly and the exchange rate of the CD in particular. I like the question on what I had said in Cape Town on the focus of our policy, that the focus of our policy is on inflation. And if inflation continues to go down, we should expect that the monetary policy rate would also go down. So the question about why it didn't go down is very relevant for this meeting. I think first, we've just seen the 7.8 new measurement coming in. We need to understand what all of that means. We need to look at the history, use the new basket to reconstruct the history and be able to tell where we are in that trajectory. We have already been doing that. We are getting some sense of it, but we want to be very sure of what the 7.8 means relative to the history. Secondly, I think we've been fairly open that were we in a stronger fiscal position, we definitely would have probably gone down on the policy rate. But under the circumstances where the fiscal situation is still uncertain, it is quite difficult to start lowering policy rate, particularly because the budget is very dependent on non-resident financing. And before you lower the policy rate, you want to be sure that that vulnerability has reduced. We don't want to lower the policy rate and then jeopardize, financing for the budget. So those are some of the considerations on why we had to leave the policy rate where it is. On reserves, yes, we're getting 1.3 billion from cocoa. We are currently at 8.1. All things being equal, we should be getting to 9.4. And if there are other flows other than cocoa, maybe even higher, unless, of course, we have some energy payments to do, which would also reduce the numbers. But broadly, you're looking at about 9 billion over the next quarter or so. You also raised the issue of tax exemptions. I think this is one of the areas where I know that there has been a push for exemptions to be reduced so that the revenue impact on the budget at least would help improve the fiscal situation. I think those are all the questions I have. Yes, my Francophone friend on National Identification Authority. I am meeting with Professor Tefua, I think, in the next 2 hours or so. The subject is on this very matter. But we are ready to request the banks to comply and accept an NIA card as a valid card for banking or financial transactions. I don't think that there are any big debate on that matter. So we would be sending that directive out. If it hasn't gone out already, it will be going out soon. And then you asked about the issue of third-party issue, because it's related to the ID, right? This is the request that we had made, that for third-party transactions, this is a required procedure. Thank you.
Thank you, Governor. Governor, my name is Eko. I report with Bloomberg. Governor, when does this medium term end? Especially regards the inflation target band. And who then will lead the charge for a newer one? And as you just rightly said, this is the time. And if there are any timelines, what do you propose, or what should we expect to see maybe the new band being like? Now, Governor, is there scope to have some form like a media workshop primarily on this banking sector reforms and a bit of the intricacies of it all? Now, over there's a lot of pushback. Other voices also speak about other things, and they feel like technicalities. And the media sometimes, I perceive, get lost. And then we may end up carrying the wrong wind to sink our own ship. If there is that scope, don't you think it would help all of us and bring us up to speed to understand God and what a view, the technicalities of everything, so we can also better inform our readers and the populace? Well, because this knowledge gap seems quite gaping. Thank you.
All right. No, you see. Thank you very much, sir. My name is Justice. I work for Xinhua and the CNC Television. Looking at the banking sector reforms, one of the concerns being raised out there still is that majority of the banks that suffered are local banks, and so it has created that vacuum of the absence of local banks in the banking sector. And then we have banks, especially from some of our sub-regional and regional neighbors, in dominating the sector. Now, I would like to know whether you have any plans to license some new local banks soon, and if that is going to be, what are the steps you are going to put in place to ensure that these banks, if licensed, remain strong and sustainable? Now, secondly, you said that the bank's main, focus is inflation, and so I would like to know, and the stability of the local currency. Now, I'd like to know whether you are concerned when you see the rounding up of figures, especially in price increases, especially when it comes to the petroleum sector and the transportation sector. Increases are rounded up such that it makes the 5 pesos and the 1 peso, maybe useless in the system, because the way the increases are done, that they don't take into consideration these currencies, so they raise it to 10 pesos or 20 pesos straight, whether it's going to be 15 pesos or 17 pesos, they neglect these currencies in the system. Are you concerned? Then my third question is the choice of Ghana to host the Africa Continental Free Trade Area Secretariat. What are going to be the implications for our financial sector and trade, and what preparations is the central bank making to be able to, maybe if there are going to be any pressures or opportunities, to ensure that the country is ready to do this from your perspective? And do you think that will necessitate the implementation of the ECO, the sub-regional currency, in a way? Thank you.
Suleiman Mustafa, Daily Graphic. I know you said that the banking sector is more solid, very liquid, and very profitable and very efficient. And maybe robust. Now, of course, we know that the banking sector now is very solid. But 23 banks, is that the optimal? Or there are still some pending applications that you are considering, or that is the optimum? And again, with the medium-term target, as you just indicated in response to Thomas' question, I know you said you are also looking at between 5 to 6. The question is, what is the optimum that we should be looking at? If 5 to 6 is the optimum, I mean, we can go with the between 5 to 6. And then maybe on a lighter note, I don't know whether you've heard of the name Consolidator General. If you've heard, you know who it is being referred to? Thank you.
Actually, I have heard the name Blowman. Yes, so let's start with ECHO on the question on the medium term. As you know, the medium term macro framework is an exercise that is undertaken jointly between the Bank of Ghana and the Ministry of Finance. So the team would have to re-look at the medium-term targets that we have set, not only for inflation, but for the budget deficit, for reserve build-up. They are all interrelated. So we have to look at all our macro targets. This is really what this exercise will be. And to add to the issue that Suleiman has just raised, the concept of optimal inflation. I mean, that requires some work to be able to say what the optimal inflation for Ghana is. I had simplified it by looking at the issue of export competitiveness and to compare our inflation rates to our trade partners' inflation rates. So that's one dimension of the problem in trying to set what the optimal inflation should be. But you also want to look at issues about the trade-offs between inflation and growth and where the trade-offs are, in a sense, minimized. So it's not a simple exercise, and we would need a lot of technical input in undertaking that assignment. Question, well, the issue of media workshop, this is welcome. It is not new. I myself, I have participated in it. The Institute for Financial and Economic Journalists have been there, have explained a couple of concepts. We can easily reorganize that and focus on the banking sector issues if need be. So I think it's a good suggestion to look at the bank cases. And maybe to look at the case by case, I would ask the supervision department to do a case by case analysis of each of the banks that have been resolved so that the media would properly understand. It's not about liquidity alone. The factors are many, and you've read about them, you've written about them, but maybe you need a refresher course on all of these issues on owner management conflicts and corporate governance breaches and issues associated with insider dealing and falsification of accounts. They're all there, and fraud. I mean, the issues are many, but we pretend as if nothing has happened, and we allow people to misinform us on why we are where we are today. Then the issue of rounding up, that's also a very good question, because this is really why we emphasize stability, so that we can preserve value. When the cedi was redenominated, we had hoped that we would be able to preserve value. At that time, the Ghana cedi was equivalent to the US dollar. This was in 2007. So fast forward 2019, we are now we're 5.3 to the dollar. So obviously the 1 peso has lost value. What you are seeing out there is a loss of value, and that's why nobody wants to deal with the 1 peso. And it's a very good way of explaining why keeping inflation low is important and why stability is important, to preserve value. And I don't blame those who are rounding up, because it's a nuisance when you cannot use 1 peso to buy anything. And this is really why they are rounding up. So let us keep the focus on the appropriate policies to maintain value. Remember the phrase, the value is the same. The key word is value. Free Ghana, the Secretariat for the African Free Trade. Yes, I think that we are very lucky to have that secretariat located in Ghana. It would add to our bid to become the financial hub in the West African region. We already have, a lot of the regional banks in Accra. We are already seeing some mobility of professionals between Nigerian banks in Ghana and their parent banks. So that labor mobility, which is required to make such trade arrangements successful, is already taking place in the financial sector. So we get Nigerian professionals coming in for a few years and then they go back. I think that is a useful thing. Similarly, it also helps in the preparations towards a future common currency. The key thing is the need to remain competitive to be able to participate in intra-African trade. Because if you have all the policies and you are not competitive, you're not going to be able to take advantage of the free trade. So I think this is where we want to end it for today. The question on optimum number of banks, I think I've dealt with it several times, that in my mind we have a framework. It's an open and liberal financial sector. If you meet the entry requirements, including a minimum capital of 400 million, we would license you. But once you are licensed, you must. Not in the last few months. Yes. But we are receiving new applications for payment service providers. I think this is where the interesting is in these days due to the new Payments Systems and Services Act. So that's where we are. Thank you.